Daily bias is one of the hardest things to master in trading, but once you get it right, it becomes your best asset. Truth is, most traders just open up their charts, mark out liquidity, and call it a day for daily bias. You go in without clarifying the narrative, without figuring out which direction price actually is going. This is exactly why they get stuck over trading, entering into choppy markets, and honestly looking in the wrong direction. They aren't looking at the full picture. Here's the things you need to know. Market does three things: accumulates, manipulates, and distributes. Accumulation is just choppy movement. Manipulation is taking a liquidity sweep. And distribution is the big move that you are all waiting for. Market structure is the key to this whole thing. You have to understand how to read the price action. If you don't know how to do that, I recommend you watching episode 1 of the trading workshop. To start off with your daily bias, you're marking out your previous day highs and your previous day lows. You're targeting previous day's directions, low or high. So price closed a red candle, then you're targeting the lows. Price closed a green candle, you're targeting the highs. And you need to check for confluences like fair value gaps, inverse fair value gaps, and liquidity. Make sure to mark those out. You're probably asking, Brendan, what happens if that liquidity has already been swept? Thank you. It's because no one else explained this. This is where the 1 hour and the 4 hour come to the major part of it. I'm looking at 4 hour or 1 hour, whichever you prefer. I use both. And I mark out every single confluence I use. You are either targeting those confluence areas, you know price is going to those areas, or you're waiting for price to hit those areas before you even enter a trade, which is more of a longer term thing. That's why I think understanding market structure is very important in this, because you have to know when to target those areas. You will be wrong from time to time, and that's perfectly fine. If you want to wait for price to retrace to those fair value gap areas, then that is perfectly fine as well. You could use it as swing trading. That is up to you. I've seen a lot of people use equilibrium in the higher time frame. I personally have not used it before. Give it a shot. Try the things that I haven't tried. Try the things that stand out to you. Implicate your own will into your own strategy. If you watch my videos, you know I say that all the time, because I want you not to copy me, not to copy someone else, but find out the things that you love, things that click in your brain as fast as possible. By understanding that market structure on the 1 hour and 4 hour, you should honestly be able to come up with an idea on where price is going to go. If you don't know what market structure is or how to use market structure, then I have an episode on my trading workshop, episode 1, on how to read market structure and price action. Once you have a good idea on where price is going to go, because you found your daily highs and lows, you found your 4 hour, 1 hour confluences, liquidity, fair value gaps, you are dropping down to the 15-minute or 5-minute. It depends on how confident you are on the day. I usually stick with 15-minute unless I know for a fact that it's going the direction I think it's going to go. Relative equal highs on liquidity or a higher time frame SMT. Those are the things that really show their true colors on where price is going. Once higher time frame confluences are swept, they have been retraced to, and you're on the 15-minute, you're searching for two things. Your confluences, you're hearing me say it a lot because price is fractal. Whatever happens on the 1 minute happens on the 4 hour. Whatever happens on the 2 minute happens on the daily. It really doesn't get simpler than that. It's hard to understand from all these big YouTubers who are using all these fancy terms, and you gotta simple it down, dumb it down. And I know a lot of you know, because a lot of you get confused off it. I got confused very easily off of it, so I'm trying to make it as simple as possible. And then your if-then statements. What does that mean? If price breaks through this certain area, then my bias is flipped. Let's take this as an example. There's a 15-minute bullish fair value gap, and price is heading towards the upside because we see a 1 hour fair value gap. What happens if price breaks through that 15-minute fair value gap and completely switches the narrative on the day? So if price retraces to this 15-minute fair value gap and breaks through, then my bias is swept, because now liquidity can go get swept. You always have to keep your mind open for a different narrative, and that's where a lot of people get caught up. They're always married to their bias. I always say, don't stay locked in on your bias, because you also have to react to how price moves. Price isn't indefinite. It's not going to always clearly go the way that you think it's going to go. So you have to keep your mind open. You'll understand which ones are important because it also aligns with the higher time frame. Now that you have your two things, your confluences and your if-then statements, you're not ready to go to the 1 minute or the lower time frame yet. You are looking for your retracement, targeting those fair value gaps. I wait for the 15-minute or 5-minute retracement onto that fair value gap. The best and most effective way for my strategy. Do not touch the lower time frame until your 15-minute or 5-minute confluence has been met. If your confluences have been created, if your if-then statement has been created, and price has retraced to your confluence, then you are finally ready to drop down to the lower time frame and enter in on your confluences. Make sure to go to one of the lowest time frames that you personally find effective. I use the 1 minute. If you like the 2 minute, the 3 minute, whatever, I don't care what you use. Use the thing that sticks out to you the best. Use the thing that you understand how to read the best. Once you have all this down, back test this, forward test this, implicate it into your strategy. Use it for a while. Try to understand it more. The more you back test, the more you'll understand. Onto the entry models, which we'll go over in the next video, along with the confluences that I have talked about. We'll really break down the confluences and how I enter into a trade. If you're struggling, I have a Discord, a free one and a premium one. If you want just a community where you could talk about trading, where you could post your trades and see how well you did compared to others, then there's a free Discord where we have everything that I know, my confluences, my entry strategy. If you want a premium one because you're really struggling on how to trade, I have a premium Discord where we'll do calls every Saturday at 11 a.m. Eastern time. Then we'll go over your weekly trades, see what you're doing right, see what you're doing wrong. We'll also have a personal community trade throughout the week where you post in your trades and I'll respond, answering what I see that you did wrong and see what you did right. Thank you for watching. Stay tuned for episode 4 where we'll really go over the confluences, entry model, and keep this ball rolling. I love you. Have an amazing day. God bless.